Hello, welcome to Target Professional Consults. Kindly subscribe to the channel if you have not done that, and then share the links to your friends as well. Today, we are going to look at one of the important standards for IAS 33 earnings per share. So, IAS 33 earnings per share. Earnings per share. Probably known as EPS. Great. So that is the today's section. Kindly be with us and let's do it together. Earnings per share. No, first of all, we should look at the its significance and the objective of these standards. The earnings per share. Great. Great. So once again, the objective of these standards is to prescribe the principles for determination and presentation of earnings per share. So the objective of IAS 33 is to determine a base of determine the earnings per share and how to present it. So that is the earnings per share. The IAS 33, the objective of the IAS 33 is to prescribe the principles for determination and presentation of earnings per share. Yeah, you can't tell us that to prescribe correct accounting treatment. No, you can't tell us that. Good. Basically, that is it. Now, in this standard, we are going to look at a few items. Let me list them here for you. First, we look at the earnings per share, basic definition or explanation of earnings per share itself. The meaning of earnings per share. That's what I'm going to look at for. So the meaning of earnings per share. Two, like the formula and then how to calculate it. Two, then look out for how does the following items affect the earnings per share. How do the following items affect the earnings per share? We are done. So how the impact on the earnings per share of the following. So A, I'll look at issue of shares at full market price, issue of shares at full market price, how it affects the earnings per share. Then B, bonus shares. And finally, right issue. Then the third consideration will be we are going to look at for the diluted earnings per share. So diluted earnings per share. That is it. So diluted earnings per share. These are the basic items that I'm going to look at for when we are done. So if you're able to go through all these three issues, then we are done with the earnings per share. Good. Now let's move on with the game. Good. Now the scope, earnings per share, it applies to the separate financial statement prepared by an entity such that that entity stocks or ordinary shares are traded on what the stock market or they are traded in public. That's both domestic or foreign stock market. Good. Or it files for return, or it's in the process to be listed. So let's look at the scope. So we look, consider all this, and we are done. Now I'm going to look out for the scope. So scope, the scope. So it covers the entities, but in simple codes, number one, listed entities. So it must be for listed entities. Good. Or publicly traded entities. So traded entities. Good. So that is the game. Great. So earnings per share must be calculated and presented or disclosed in a financial statement by who? Listed entity. So listed entity. Or if we're in a process to be listed, or you file for your annual returns. So anytime you're going to file for your annual returns, you have to include that of your earnings per share. So that is. Then two, group accounts. Group accounts. So consolidated accounts. So consolidated financial statement of a group with a parent whose other shares are what being traded on the stock market or who files for return. So it's the same point again. So two, for group, just that the parent for that group ordinary shares must be traded publicly or files for annual return or is in the process of filing. That's all. In the process of filing. It's in the process of filing. So these are the entities that must present earnings per share in the financial statement prepared. So individually, you can do that if you're a listed company, or you file for return or in the process of filing for the return, basically. Then if you're a group account, or if you're in a group account, then the parents ordinary shares are traded publicly, or the parent files for returns, or is in the process of filing, or process of filing to be listed. That is it. Okay, now let's continue with the game. Let's start with the actual action. The actual action. Let's start with the actual action. Earnings per share. So what do you think will be the formula for earnings per share? Earnings per share. The formula for earnings per share. So basically, earnings per share will be what? Anything per share is that item over the number of shares, right? Great. So basically, you give the earnings. Good. The earnings are divided by the number of what shares. Number of shares. Good. Just that there are so many types of earnings. There are so many types of what earnings. Earnings can also be called profits or return. So there are so many types of profits. Okay, let's start. Gross profits. Right. So we have gross profits, operating profits, profit before interest and tax, profit before tax, profit after tax. Likewise, the earnings too. So earnings after tax, earnings. But here it must be the earnings attributable to the ordinary shareholders. So let's write this earnings attributable to the ordinary shareholders. Ordinary shareholders. Perfect. That's in the individual accounts. So that is in the separate financial statement. What if it's in the group account? If it's in group account, the earnings per share for group must be the earnings attributable to what? The ordinary shareholders of the parent. So in the group account, I'll just repeat everything and add of the parent. The ordinary shareholders of what? The parent company. Of the parent company. Of the parent company. That is in the group account. So any NCI's profit must be taken out to get a profit for the parent. Great. Now let's continue the game. So if I should present this by equation or include this in the formula, if we change a little. Then the third one is the number of shares. The number of shares must be weighted average number of shares. You have to weight the average. So the number of shares as the third item must be what? The weighted average number of shares, not just the number of shares. It must be the weighted average number. Good. Now, considering this, then we have to restructure the formula. Good. So the earnings that we are talking about must be the one attributable to ordinary shareholders. That is the earnings after tax and after any all preference dividend. All preference what? Dividend. Good. So that is it. So if we should incorporate this, we have to change the formula. And the formula will be earnings per share is nothing by profit after tax less what? Irredeemable preference dividend. Irredeemable preference dividend. Good. Why irredeemable preference dividend? Because the redeemable preference dividend will be classified as what? Finance cost. So which has been subtracted before arriving at what? Profit after tax. So the preference dividend which is yet to be subtracted is the irredeemable preference dividend. That one goes to equity. So dividend paid on irredeemable preference shares, that one will classify it as dividend. We add it to the equity dividend and then include it in the changes in the equity. Good. But the redeemable preference dividend, that will be classified as what? Finance cost. That one has been subtracted already. So only the irredeemable preference dividend is yet to be subtracted. So this one is for single company or separate financial statement. Separate company. So if I should end here, I'll just divide this one by the weighted average number of shares. What if it's a group? Then if it's a group, then you less what? Then NCI's profit. So NCI, non-controlling interest profit, the answer of the profit. So NCI's profit. How we get it? Great. NCI's profit. Then all divided by weighted average number of shares. So that is the one. So we pick a very nice illustration and start working on it. Then we add that. So kindly follow us when we go through our first illustration. Great. So let's see. For the first illustration, I'll build upon on it in that order. So kindly be with us. Great. So let's pick our illustration. First illustration. The target group, great. Target group prepares financial statements individually and consolidate it at the end of the reporting period. So this is the extract from the financial statement consolidated one of the years. So extract from the financial statement. That's all. For the year ended 31st December 2019, just last year. We're reporting in thousands of Ghanaian cedis. So our profit, this is the group account. When you see target group, that means group account, consolidated statement of profit alone. Great. Now, profit after tax, some extra. So, profit after tax happens to be $20,000. Then NCI share of the profits. NCI share of the profit. NCI share of the profits. NCI 720%, of 20%, which represents 6,000. So let's make it 6,000. In fact, let's make it 3,000. And then dividend payment. First, ordinary. Ordinary share dividend paid during the year happen to be 8,000. So that's 8 million, right? So ordinary share dividend paid 8 million, making 8,000. Irredeemable preference shares, they also paid 4,000. And then we work the case. Redeemable preference shares, don't touch it. So that one will be accounted for before arriving at this profit after tax. So that is it. We attend. Then finally, note 1. The outstanding standing shares at the end of the reporting period happen to be 60,000 ordinary shares. 60,000 ordinary shares. So we can call it 60 million. There are 60 million. So 60 million. So So that's the number of shares required. Calculate the earnings per share for target group. Once you hear group, it's a company. So it's a group account. It's a consolidated statement. So we use the long approach. So let's see how we do this. The solution. Solution. Great. Solution. So we tell the examiner that earnings per share is equal to the profit after tax less irredeemable dividend, preference dividend less NCI profit, all divided by weighted average number of shares. I'll tell the examiner that this is equal to what's the profit after tax? 20,000. Here, the 20,000 less 2,000, right? Less what? The irredeemable preference dividend. Here, ordinary dividend will not be taken into consideration. So less the 4,000. All divided by the weighted average number of shares, 60 million. And because you create 3 zeros, 60 million will be what? 60,000 shares. So what is the earnings per share? So what is the earnings per share? This will give us 18,000, 14,000. So 14,000 divided by 60,000. So in short, we'll have 14 divided by 60. That's 23.33 pesos. So either you leave the answer like this, 0.2333 like this. This is in cities, or you presented 23.33, 2 decimal places, either in cents per rate or in pence. So that is it. We are done with the earnings per share. Basically, that is how we are going to calculate the earnings per share. Now, when we are done like this, the next section is to illustrate on how the following 3 items will affect earnings per share calculation. Item number 1, issue of shares at full market price. Item number 2, bonus shares. Item number 3, that is the rights issue. Then we are done. Then we come to the second page, come and look at diluted earnings per share. Then that's the end of earnings per share. Very interesting section. Kindly stay tuned. I'll give you the importance of the earnings per share. So I'll do that before we look at the 3 items. Good. So now let's move on to the next section of the earnings per share. Now that we know earnings per share, and then we know how to calculate it, can we look at some important or significant of earnings per share? I'll give you 3 of the importance of earnings per share. 3 significant of earnings per share. Very significant. To investor and to the company, both the investor and the company. So, significance of earnings per share, or the importance of the earnings per share. So let's look at each one. So importance of EPS group earnings per share. Number 1, number 2, number 3. Number 1, it's used as a basis of measuring what profitability. So as a measure of what profitability. So earnings per share can be used as a measure of profitability. I like that. Of profitability. So if I give you company A and company B and their earnings per share, this one is 30 pesos, but this one happens to be 50 pesos. You want me to tell me that the performance of company B is far, far better than the performance of what company A in terms of what ability to generate profit? Yes. So earnings per share gives basis of measuring profitability of organization. Great. So basically, now point number 2, important or significance of earnings per share. Earnings per share serves as what? As an indicator of dividend. So earnings per share serves as what? Indicator of dividend. So serve as what? Indicator of dividend. Of dividend. You know, dividends are the part of the profit distributed to what the owners. So if you have your earnings per share is high, it gives an indication or some type of assurance that this company is likely to pay or have the capacity or the strength to pay enough dividend to the investors. Good. So assume that your earnings per share of company A and company B that is being of your earnings per share. Yes, 20 is Ghana cedis, 20 Ghana cedis. Your earnings per share is 4 Ghana cedis. So it's also in cedis, 4 cedis. So these two people that is being of which of them will likely to pay more dividends? Likely, not absolute, not exact, likely. Or that is being equal. You can have more earnings if you get it honest. Good. Relatively, then you are done. Even though the actual dividend paid out of what retained earnings, but your earnings per share give an indication. Good. Your earnings per share will not determine like the amount of dividend to be paid. However, it will influence it because some organization, whether there was profit or not, they pay dividend. Even if there's earnings per share like 100 Ghana cedis, still they might not distribute some part of the profits as what as dividend. So basically that is it. So it serves as what indication of what dividend. Then finally, earnings per share serves as determination or the determinant of the price earning ratio, PE ratio. So serve as determinant of what PE ratio. So serve as serve as determinant of price earning ratio, PE ratio. Now, PE ratio is one of the important measures when it comes to profitability and investment. The issue is this: the earnings per share fit into the determination of the price earning ratio. The PE ratio just gives the actual value that must be paid for each of the shares. So the determination of that value will be based on the earnings per share. So basically, these are the three important sections of the earnings per share. It's critically important. So remember, ICA November, May 2018, yes, ICA May 2018, question number 2A. Explain the significance of what earnings per share 3. So that is it. Okay, now let's continue the game as a several determinant of what the PE ratio. Now I'm going to look at how does issue of shares at full market price affect the earnings per share. So impact of what issue of shares at full market price, how does it affect the earnings per share? So how does issue of shares at what? Full market price affect the earnings per share. A very topical issue. So we cite an example, then look at it. Now, issue of shares at full market price, that means the shares must be weighted. So you have to weight the average of the shares. That's all. So let's have an example. Example or illustration 2. For example, 2. The first example that target be examples. Company have the following information. A company have the following information. Has the following information. Available. So let's start. So 20, that is 2019, December 2018, and December 2019. Profit after tax. That's Ghanaian city of what? The profit after tax is what? 50,000 cedis. And here the profit after tax happened to be 60,000 Ghana cedis. So the number of shares, in issue as of December 2018, the company has just 90,000 shares. 90,000 shares. 90,000 shares. So number of shares in issue, 90,000. Great. So 90,000 shares. As of December dash, I will inform note 1. So note 1. On January 2019, not January. On October 1st, October 2019, the company made as at 1st January 1st October 2019, the company issued, so I'm cutting this short, issued 30,000 ordinary shares at full market price. So issued 30,000 ordinary shares at what? Full market price. You don't need to be informed that price. All what you know is just at full market price. You're done. At full market price enough. It's being 5 cedis, 10 cedis, no, that one doesn't matter. All what you need to know is for full market price. That's what it ends the game. So how do you solve this? So required calculate the earnings per share for the company for the year ended 2018 December and 2019. So that is December 2018, December 2019. Calculate the earnings per share. So tell the examiner solution. So solution. So the earnings per share. Nicely like that. Can you write a formula here? Formula. Then when you are done, go to 2018, go to 2019. How that's been arranged, same way, or you can then it's current year and then the previous year. So the formula will be the more I write, the more I remember. Earnings per share is nothing but my profit after tax over the weighted average number of shares. I am done. That's all for earnings per share. 2018 was the profit after tax. Here 50,000, and here it was 60,000. That is all. So what's the profit after tax? So the profit after tax will be 50,000. I write it 25 over. And wait, go to 2019 and put it there too. So 2019 is 60,000. I'll put it 60,000 here too. Then I relax. Go look for the weighted average number of shares. Now, have you seen the number of shares in issue? December, as at end of December, they have what 90,000 shares. So here we will pick the 90,000 because the whole 2018 they've no issue shares. So whatever they have at the start of the year will be the same as at the end. You just put the 90,000 shares here, and here's Ghana cedis. Good. And when it comes to 2019, they made certain issues at full market price. So we have to take that into consideration. Yeah, even if the examiner considers include the 120,000 here. Why 120,000? Because if you do have 90,000 there, and if you issue 30,000 of it, increase it to 120,000. We are not going to put the 120,000 here, not at all. Why? Because not all the 120,000 contributed to profit. Not all the 120,000 contributed to profit. Good. Let me make some quick changes. So because the next items, I'll still use the same question. I want to make it on 31st March. On 31st March, that's all. I just want to change the date, 31st March. That's why I make it October, the year end is too short. So basically that is it. So that means you have to go and calculate the weighted average number of shares for 2019. That's so working. So you pause. So like this, in the exam, you can't do the workings, move on. At least you've done something for us. How we get it. So the workings number one is what? The weighted average number of shares. So let's go and perform the workings for it. This table must be part and part of you, and let the table be with you. So you start by saying that date. Okay, go then. So the date. Let me squeeze it somewhere there. First item is the date. Second is the detail or the narration. The next item will be the number of shares. Then the weight. Then here will be the weighted average number of shares. So basically, this is the table. Kindly keep it short and smart and simple like this for us. So we are doing for 2019, agreed. So for 2019, for 2019, let's start with the dates. So for 2019, we tell the examiner that as of 1st January 2019, the number of shares in issue happened to be 90,000, agreed. So we call it balance or down. The opening balance of the number of shares happened to be 90,000 shares. We are done. What will be the weight? The weight is nothing by the number of months left for the year to end from that particular date. Please, these workings will just help us to weight the average of the shares or to get the weighted average number of shares. That is the workings that we have to master all. Get to work nicely. So from January 2019 up to December 2019, how many months? Exactly 12 months. So 12 out of 12. So that's full year because the shares was there. Open balance shares will be with you rest of the year. So you take 4. So this time this will give us 490,000. Then we are done. Then move on to the next section. Then move on to the next section. So the next day, after the first March, they issue shares. So the first March, they have what? Issue shares. So for the first March, they have issue shares of what? That is it here, the 1st of March 2019. What will be for the issue of shares? So issue of shares at what? 4 market price. That's all what I want to know. How many shares came in? If you issue 30,000 ordinary shares, so in the 30,000 here, then ask yourself from the date that they issue the shares up to the year end, how many months, so that we can take the average of that. So 1 month ownership count here. So from 31st March to the year end, December 2019, how many months? So 3 months gone. So let me do what? 9 months. Great. So I like that. So the way to be 9 out of what? 12. That's it. So 30,000 times 9 out of 12 will give us something like. Great. So taking 9 months out of the 30,000 will give us 22,500. Agreed. Good. So 22,500. Perfect. So we are done. All we have to do is sum it up. Sum all of them up. So when up, let's go down small. Okay, good. So the total number of shares will be 112,500. That's the weighted average number of shares. But the outstanding shares will be 120,000. That's the shares in issue. Yeah, done. The shares in what? In issue. So therefore, the weighted average number of shares that for 2019 will be 112,500. 112,500. Basically, that is it. So what do? Let's go and include it in. Let's go and include it in. Let's go and include it in. So here will be 125,500. So we are done with the weighted average number of shares. Why are you weighting the average? Because not all of them will contribute to profit. So we have to take the average of that. Here to be 60 divided by 112.5. And that is 53.33333. So in short, I have something like, so here the answer for 2018, I'll come to it. Let me write it 2019 before I forgot. So that'll be 53.33 pesos. Agreed. So 53.33 pesos. Then let's do that of the 2018. That'll be 50 Ghana cedis for every 90 shares. So that's 0.55 shares. So 0.55 shares. So 55555. But length of the 5 so 5 pesos. So that's for 2018. 18. We are done with the earnings per share. So basically, this is how issue of shares at full market price affect earnings per share. I am moving on to bonus shares. Bonus shares. Let's move on to bonus shares. Bonus shares are the shares issued for free. We also call it deemed dividend. Deemed dividend. No, at the end of the year, the company is supposed to pay dividends or declare dividends, distribute to the owners as a way of return to the shareholders. By an period of difficulty, you have enough profit, but the cash to be distributed is not there. So what do? Okay, then let's give them shares for free in place of the money that we have to spend while the money is not there, but we have profit. Good. So that's the bonus shares. Normally given to existing shareholders. If not, all of us, we are shareholders of every company, because if they're sharing shares for free, you're going to take some, right? Everybody. Okay. So now let's look at, but please, I'll read it upon this question. So that's how I'll do it. I'll read it upon this question. Good. Right. So it's the continuation. So I'll just make changes, few changes, and then we are done. Great. So let's continue. I'll take off the screen and start everything again. But my illustration question, I'll be building upon that one. So if I've not done that one, kindly get it for me. The good news is that we don't wait for that's the good news. So let's make some few changes here. So the same question apply. I only change this profit up to 95,000 series. That's the profit made. So that's the changes I'm doing. So note 1 is still valid. I'm going to note 2. Note 2. On 1st of July, on 1st of what? July 2019, that's after March, right? 1st of July 2019, for the simplest issue, the company made a bonus issue. Of 1 for 4. 1 for 4. 1 for 4 share. Or in simple code, 1 new share for every 4 existing shares, or 4 shares in issue. 4 existing shares in issue. That's it. Good. So 1 for 4. I'm done. That's note 2. So why? Calculate the earnings per share for 2018 and 2019. That's the first requirement. Requirement number 2. Compute the comparative earnings per share for 2018, which will be included in 2019's financials. We are done. Now let me take the requirement again. The required. So this requirement, the required. Comment number, calculate the earnings per share for who? For 2018 and 2019. The comment number B. calculate what we call comparative earnings per share for 2018, which we include in 2019's financial statement. I will explain it into detail when calculating the calculation. Okay. Now let me confirm certain figures here. Okay, I think we can continue the game. Okay, so basically that's the question. Please, this either we use bonus issue of 1 for 4. Yeah, that 1 for 4 shares. So 1 new share for every 4 shares. You can also make it 2 new shares for every 5 shares. So that's 2 for 5 or 1 for 3. But we like what? 1 for 4. 1 for 4. If you like, repeat 1 for 4 for over 50 times. Guys not taking then a challenge. Okay, now let's start the game. Please, I'm going to take this section off to produce the solution there. So kindly take a screenshot of this section for me. Okay. I can even write a note here. Bonus of 1 for 4. So that I'll take it off. Okay. Okay, so solution. Solution. First of all, it says we should calculate the earnings per share for 20. So earnings per share for that of 2018 and 2019 respectively. As usual, the more I code the formula, the more I remember. So let me code the formula again. Here, write the formula here. Then I'll put, so the formula will be profit after tax, all divided by weighted average number of shares. Okay, so basically that's the earnings per share. But not going here. So let me speed it somewhere here. Weighted average number of shares. Good. Now let's see the basic earnings per share. For 2018, you can get everything. For the number of shares in issue is 90. You have profit of 50,000 after tax. So therefore, the profit after tax will be 50,000 Ghana cedis divided by the number of shares is 90. So for 2018, it's still the answer that we had first, which is what 55.56 estimates. But for 2019, what do? You can only record a profit after tax of 95,000. Profit after tax of what? 95,000. So let's see. 95,000. Now let's look at this. Then we will pause and go and calculate for our weighted average number of shares. Don't forget there's a B requirement, comparative. I'll explain comparative after the calculation. So let's go to the working. So we leave a space. So if our working, this will be the first page, the next page going to the workings there. Or count, let's say 4 lines, 4 to 5 lines, and leave the workings there. Don't forget the rule of 4 to 5 lines. Good. So workings. So workings. So that will give us something like the first one is weighted average number of what? number of shares. As usual, keep the table. Short and useful date. The detail. Number of shares. The weight. The weighted average number of shares. The weighted average number of shares. So that is it. Okay. Keep it short. Simple. Straightforward. So let's start. As usual, 1st January 2018. That's the opening balance. So balance brought down. Number of shares they have will be 90,000. For 1st January 2018, sorry, 2019. 1st January 2019 the same as for 31st December 2018. Basically, that is it. So put it together. The weight will still be 12 over 12, and it will give us 90,000 shares. Then don't forget about the third March, the issue shares. We've done that one right there on the 1st March, so the 1st March 2019. Issue of shares at full market price. Full market price. They issue 30,000 shares. This question is there. 58%. So 30,000 shares. Then what do? You weigh the average. We have 22,500. Then 9 out of 12. So we have 22,500. In this scenario, the central focus is the bonus of 1 for 4. So on 1st of July 2019, they made a bonus issue. So here, just write bonus issue. Now let's go and calculate the number of shares that will come in as bonus. It's a 1 for 4, or 1 new share for every 4 shares in issue. So here, how will you get the value? So basically, the ratio given to you, if you don't give us the number of shares like this that came in as bonus, we have to calculate by ourselves. How do you get it? So let's break that one out. Simple like this. Bring the new shares always up, divide by the existing shares, times the number of shares in issue. That's all. Times the number of shares in issue. So in this question, the new shares, how many shares are you giving out as? 3, 1. Out of what? 4 existing. So times the shares in issue. Here, what will be the number of shares in issue? At the date of the bonus issue, that's 1st July, the company is having 120,000 shares, but not 115,000. The number of shares that will qualify for the bonus is the number of shares in issue. So at that date, if I sum all this one up, I get 120,000, right? So on that day, the company have what? 120,000 shares in issue. So this will give us This will give us 30,000, right? Great. So this will be 30,000 shares. 30,000. So that's 30,000 shares. So that means the bonus shares happen to be 30,000. It is coincidence that the bonus shares is for 30,000. Great. So what do? Bring it in here. That on that day, we issue bonus share of what? 30,000 shares. Wow, that's good. So now what will be the weight? Please, let's take a look. We don't weight bonus. Why? What is the reason? The reason is this. There's a great assumption. We assume that the bonus shares was there at the start of the year. That's all. So the bonus is deemed to be there at the start of the year. That is it. So if the bonus is there at the start of the year, then the weight must be 12 over 12. So for that matter, we don't weight bonus. Even though we issue the bonus shares at when? July, which is 6 months to the year, and we could take full year 12 over 12. That is it. So for bonus shares, we don't wait what? Bonus shares. Bring the full section. So this by this it will give us what? 30,000. So we are done for bonus share. We are done for bonus share. We are done for bonus share. Good. So what do you get if you put all of them together? So 112,500 plus 112,500 plus 30,000. That'll give us 142,000, right? So 142,500. Then that shares is 150,000 shares. So that will be the shares in issue. But the weighted average is what? 142,500. That's all. So let's go and include it. So this is the weighted average number of shares. The underlying word is that we don't weight bonus. The format must be stated in. That's all. So now let me clean this note or this working from there. So we go to the actual. So first, I come here and key in 142,500 shares. And then when you divide, what do you get? You get something like 95,000 divided by 142.5. That will give us 66. Okay, I'll make some slight changes here. I want to make this one 80,000. So 80,000 divided by 95. So 8,142.5. So 75 divided by 142.5. Okay, so on make some slight changes. Let me get 70,000. I'm done. So here earnings profit after taxes was 70,000. It doesn't matter which amount stated there. But I want to illustrate something to you. So 70,000 divided by 142,000. So 70 divided by 142.5. That's 49.12 Tesla. So 49.12 Tesla. Okay. So based on this, you would tell the company that they perform bad. Why? Because the earnings per share has dropped from 55 pesos to 49 pesos. So from 55 to 49 pesos. Now, here, if we don't tell you or if you don't disclose the comparative information, you're going to make a wrong assumption. So now let's see something here. Now, in 2019, something happened that we have to acknowledge that. There was a bonus issue. Yeah, there's no bonus issue. No bonus issue. So anytime there's a bonus issue, bonus does not contribute to profit, but it takes profit away, which has reduced the earnings per share. Even though there has been an increase in what? Earnings from 50 to 70. So the earnings per share has dropped. It's as a result of what? The bonus share. It's not as a result of what? That of the number of shares issued, but it's as a result of the bonus share. So therefore, it must be a what? A savior. That is the comparative earnings per share. So let's go and calculate the comparative earnings per share. Comparative earnings per share. Now, with the comparative earnings per share, that one is the earnings per share for 2018, which will be calculated in 2019 as a result of the bonus issue. Okay, so that is. I think I wanted to write it for comparative earnings per share. It is for 2018, but it will be calculated in 2019. Why? Because we can't compare 49 to 55.56. It is haram. We can't do that. Why? Because there are what exceptional items. Here there's bonus, here there's no bonus. 2018, no bonus. So what do we do? So how do you calculate the comparative? The formula will be, the more I write the formula, the more I remember. Go to 2018 and pick profit after tax for 2018. Then divide it by the number of shares in issue, the number of shares, plus the bonus shares. That's all. So whichever is causing distortion in profit. So anytime there's bonus issue, it will distort the profit. How? It will always decrease the profit. So go there and assume that this bonus issue was also exist in 2018, so that you can now compare. So that they will be of the same basis comparatively. So now you can compare. If you leave the bonus here without affect the bonus here, it will not match. So that's all. So this will give us profit after tax of 50,000 series. Number of shares in issue was 90,000. Plus all the bonus issued in 2019. So all the bonus issued in 2019 is what? 30,000. That's the bonus. 30,000. The bonus issue was 30,000. So plus 30,000. So what will be the answer? Now you can compare this for 2018. You can compare to 2019. You cannot compare this to this. It is what? Haram to do that. Add a bonus, just the bonus. Because you don't weight bonus. So assume that this bonus will exist in 2018. What will be the gain? So in short, the 50,000 is about 120,000. And realize that they've done far better in 2019. So 50 divided by 120. That's 41.67 pesos. So 41.67 pesos. So now you can compare. They've done well in 2019. If you compare to this, they've not done well. No, you are mistaken. Comparatively, provide information that you can compare. That's the comparative information or comparative earnings per share. In simple code, is the earnings per share for the previous year, but it will be calculated in 2019. Why? Because in 2019, right after the issue of the bonus shares, we cannot compare that one to that of 2018 because this bonus does not exist in 2018. Basically, that is it. So in short, anytime you see the examiner mention comparative information, then that means there's what bonus share in the past. So take note. If earnings per share question drop, and then there was what? Comparative, the word comparative in the requirement, then see that is bonus in the question. Because the bonus that distort the profit. Bonus will distort the profit. So if bonus has distorted the profit, what do? You have to now restate it or assume that this bonus do exist in 2018 to also distort the profit there so that we can now compare. Now, if you compare this one to this one, they're doing well in 2019, but if you compare to this, they're not doing well at all. Then that's the end of the game. So we are done with issue of shares at full market price. And you're going to what? We're done with the bonus. Now let me do the last item, that's right issue. Then we are done for this section. And kindly watch the second section or the second page for that of diluted earnings per share. Great. So now let's move on to the right issue. Right issue. Right issue. Right issue here, I'll build a new question. I'll build a new question. Let's go and build a new question. I like this profit too. Let's build a new question. I'm going to build a new question. Winners PLC. Winners PLC. But let's use the name. So Winners PLC. Let's make it but A limited. A limited. Let's go up with A limited as the following information issue. Have the following information. So let's see. As usual, 20. In fact, let me wait the case. 31st March 2017. Yeah, like 2018. 1st March 2018 versus 31st March 2019 financial year. Profit after tax anti-tax happen to be Ghana city of 60,000 cedis. And this profit happen to be 80,000 cedis. So these are the profits made for the 2 years. Great. Great. Let's continue the game. So quickly, let's see number of shares. Number of shares in issue. As at 31st March 2018, we have 100,000 ordinary shares. Over here, but let me do 150, 150,000. But let's see the note. So the following footnote, in fact, the only one, is the main statement, note 1. So note to the account, note 1. As at the date of the issue is we have to explain the right issue. And I'll start the main wording. So I just want to note 1. So April, May, June. So as at 30th June, so on 30th June 2018, you know, the financial year ends at 31st March each year, the 2018. So that one starts from where? 1st of April 2017. So for these dates will affect what? 2019 financial year. So 2019 start from here, something like this. That's all. So the 2019 financial year start from 1st of April 2018 and end at 31st March 2019. Good. So that is it. Now we'll explain right issue. The company made a right issue of of 3 new shares. 3 new shares for every 5 existing shares. So existing shares at 2 Ghana cedis per share at what? 2 Ghana cedis per share. Per share. When the actual share price to that, but not what is it? So let me make this look flexible. The market price of the share right before, just before the right issue happened to be traceable. So market price of the share, market price per share before the right issue. Before the right issue happened to be 3 Ghana cedis. Now, before I solve this question, let me explain what we are going to do. We are going to look at right issue, how it affects what the earnings per share calculation. We have looked at the issue of shares at full market price, at bonus. We're going to look at right issue. Now, right issue is a bit simple. It's like this, but complex in calculation. It's not okay, but complex in calculation. Right issue is when the issue shares below the prevailing market price. We normally call it the shares were sold at a discount. At what discount? So below the prevailing market price. Below the market price. So anytime, if your share price is 10 Ghana cedis and issue the shares at least 8 Ghana cedis, that is what a right issue. So anytime shares are sold below the prevailing market price, then we normally state that the shares were sold at a discount, and that is the right issue. Someone will tell you that the shares that will give you to the right-handed people, people that have rights, Yes, it's not for everybody. It's the right issue. Bonus and right issue is not for anybody. It's for people that have what? Right. So just the right. Right simple means existing shareholders. That's all. Existing shareholders. So that's the right we're talking about. So the new shareholders don't have rights. Like if you're not a shareholder, when there's a right issue, you cannot acquire unless someone sells his or her right to you to go and then partake in that. So basically that is it. But what is important here is it right issue, because you are selling the shares at below the prevailing market price, there's an assumption. We are going to assume that one, some of the shares came in for free. So there's a bonus element. And two, there's full market price. That is it. So that makes right issue a bit complex. So because you issue the shares below the prevailing market price, some of the shares came in for free. Some of the shares too, yes, they paid for it. Whatever they give us, let's use it to offset the full market price. And you know that we don't wait bonus, we wait the one at the full market price. So that means we have to find a way or a technique that we can separate the number of shares that came in as bonus or number of shares that came in by way of what? Full market price. That's all about right issue. So if you can perform magic for us, that's okay. They've issued 30,000 shares by way of right issue. Out of this 30,000, tell us the proportion of the bonus element. Tell us the proportion of the full market price. So the proportion of the bonus element, let's assume that the bonus element happens to be 10,000. Oh, then the one full market price is also 20,000. How to separate this is the challenge. The rest is not difficult. Good. So I'll give you 4 steps. So basically, they are three. 3 steps to get the one at full market price, and another step, the step 4 to get the bonus element. Good. So I also call it 3 steps. So I'll give you 3 steps to do the apportion or the allocation. Then that's all. The rest to continue. So that's the right issue. So take note that right issue have 2 features. Some part of the shares were for free, some to at full market price. But because these 2 items have different treatments or different weighting style, one we weight, one we don't weight, to be prudent for you to demarcate it and find the actual number of shares that came in as bonus and at full market price. So let's go to the step. So to do that, I'll use this question as what? Illustration to do that. I'll use this question as illustration. So first, to get the number of shares at full, in fact, you can only get the number of shares at full market price first, before you find the difference between the total number of shares. So that is it. So step 1, calculate what we call the TEP. We call it theoretical X-right price. Great. So basically that is it. Now let me complete this question. There's a requirement. The requirement is the same as the one that we saw just before this. So if you have that requirement there, just copy it there, and then you are fine. Good. If you have that requirement there, just copy it there, then everything will be fine. So the requirement says that this: calculate the earnings per share for the year ended 31st March 2018 and 2019. That's the A. B, calculate the comparative earnings per share for 2018, which is included in 2019. Why comparative? Anytime there was what? Anytime there was bonus to distort the earnings, so there must be a need for what? Comparative information. Good. So that is it. So now let's see the steps. So now you have the requirement there. Good. So before we go to the earnings per share, let's quickly go through the steps to separate the number of shares. Who can tell me the total number of shares? Now the total number of shares, how many shares they have in issue? They have 100,000 shares in issue. And I said that 3 new shares for every 5 shares. So that means the number of shares that came in will be 2 out of 5 times 100,000. That will be 3, right? So 100,000. Therefore, to give us 60,000. So this is the 60,000 shares, and this must be split into 2. The bonus and what? The bonus element and the full market price section. That's all. So I'm going to look at the steps that we have to go through to get the full market price first. That's step 3. Then to get the bonus share. If you get it at least 40,000, then here must be 20,000. We are there. I may change some of the dates. Okay, so the 30th. The 30th, you have to get the number of months, then you are done. Let's go to the steps. Step 1, calculate the TEP. We call it theoretical X-right price. Calculate the theoretical X-right price. We call it the TEP. Theoretical X-right price. So that's the first step we're going to do. Step 1, calculate the theoretical X-right price. Great. So step 1, so we'll call it getting the number of shares at full market price. So that's the step. Let me see that part is coming. So number of shares, or just the separation of the shares. First, step 1, I got a step for you. Step one, calculate what we call the theoretical X right price. I like that. X right price. So we call it TEP. In short, we call it TEP. Theoretical X right price. So that's the TEP. X right price. Theoretical X right price. There you are done. So that is step one. Step two, get a total proceed. Total proceed. Step three, that's all. Then you are done. Just 3 steps. The number of shares at full market price. Number of shares at full market price by dividing step 2 divided by step 1. Then you are done. Then step 4, you got a bonus section. So bonus, the number of bonus, you should use the full market price bonus. Then we are done. Then you go ahead and go and calculate your earnings per share. So you can take a snapshot of this first. I take it off and do the actual. Use this one as well as illustration. So can you take a snapshot of this? Step 1, total price. Step 2, total proceeds received. Step 3, number of shares in issue. And then number of shares at full market price. And then step 4, the bonus section. Just the difference between this and then the total number of shares issued. Then we add that. Great. So now let's start the actual deal. So just want to just discuss like this. So let's see. So step 1. Step 1, the first, right on top. Theoretical X right price. Wow. That's the theoretical X right price. It's like a TEP. You can call it TEP for short. TEP for short. Now, how do you get it? There are so many ways. Let's consider this approach. First, what you do is you get a new share. So write here new, and write here existing or old. So the new shares, how many shares? Let's go to the ratio. 3 new shares, so 3. So write the 3 shares here. Normally 3 shares at what? 3 new shares for every 5. So the old one will be 5 shares. I'm going for the share price. Now the share price will be at 2 Ghana cedis. The 2 cedis is for the right issue and 3 cedis is for the existing shares. So let's take it again. 3 new shares for every 5 existing shares at 2 Ghana cedis. So that means the shares were sold at what? 2 Ghana cedis at a discount of 1 Ghana cedi. Meanwhile, the share price was what? 3 Ghana cedis. The share price happened to be 3 Ghana cedis. So that means there was a discount of 1 Ghana cedi. Good. So the new shares were sold at what? At 2 Ghana cedis. So 2 cedis. So, and then the existing shares, the value was 3 Ghana cedis. So that would be 3 cedis. In all, it will give us total of 6 Ghana cedis and here 15 cedis. So you put them together, get 21 cedis. Put them together, get 8 cedis. So therefore, the TEP, let me put it here, the TEP happened to be 21 Ghana cedis over 8. That's all for the TEP. So 21 cedis divided by the 8 cedis. So by the 8 shares. So 21 divided by 8, and that's the TEP. So we have 2.625. That's the TEP. Usually the TEP serves as the mediator or the average. It's equal to I don't want to write full figure here, 2.625. That's the step. Now, when you finish with the calculation, make sure that your answer is not more than the full market price. Full market price, that's 3 cedis. But not also less than the right issue price. The right issue price, which is what 2 cedis. So the step always, the answer is between the right issue price and what? The full market price. And 2.625 agreed confirms that. If you calculate the answer, you're getting like 1.8. Don't even continue to write the answer. If you calculate your answer, you're getting like, let's say, 4 Ghana cedis. Don't even continue because it's out of the range. It must be between the right issue price and what? The check. Because it is an average. It is an average. Yes, it's an average. It's like you are finding the average of students who score an exam between 30 Ghana, 30 marks up to 45. And you are getting an average of, let's say, 50. Not at all. You get, do not happen. You even get average of 20. No. So that is. Okay. Now let's continue the game. Let's continue the game. Now, another feature about the step is that right after the right issue, the market price of the shares is the step. That's all. So right after the right issue, the market price of the shares is what? The step. So that is it. So 3.625 Ghana cedis per share. So now let's continue the game. Step 2, calculate the proceeds, total proceeds. What will be the total proceeds? The total proceeds is nothing but the number of shares times the right issue price. How much did you receive from the proceeds? So it's nothing by the number of shares times what? The share price. How much the shares were sold for. So the step 2 what? Total proceeds. The total proceeds will be the number of shares times what? The price at which the shares were issued. How do you get the number of shares? It was every 5 shares, they are giving 3 new. So 3 over 5 times the number of shares they have in issue. They have 100,000 shares in issue. So this one alone will give us the number of shares, which we had was 60,000 shares. Out of these 60,000 shares, they sold it for Ghana cedi of 2. So that will give us 120,000. 120,000 Ghana cedis. So we get 120,000. So the proceeds will be 120,000 cedis. So that's the actual amount we see from the sale of this share. 120,000 Ghana cedis. Average. So 60,000 by 2 cedis. That will give us 120,000. For the efficient 60,000 shares, we are done. Let's go to step 3. Step 3. Get the number of shares at full market price. So number of shares at what? At full market price. Number of shares at full market price. That is step 3. Number of shares at full market price. So number of shares at full market price. Good. And it says the step what? Step 2 divided by what? Step 1. Here, to get the number of shares, we have to answer a very basic question. The question is this. If the total amount we receive is 120,000 from these shares, this 120,000, how many shares can it acquire at full market price if there's no free inside? How many shares? Oh, then let's look for the share price at that time. And we said that right after issue of shares at the discount or right issue. Right after right issue, the market price become what? Become the TEP. So that's why we are dividing by TEP. So therefore, it will be equal to the 120,000 Ghana cedis divided by the TEP. So the TEP will be 2.625. That's the TEP. So if you divide 120,000 by 2.625, you get what? So let's see. So 120,000, 123 divided by 2.625. And now give us 45,714 shares. So 45,714 shares. So that means the number of shares that came in at a full market price is 45,714. The rest were for free. They didn't pay anything. If they should have paid that money that we have received, 120,000, we can only buy 45,000 shares. The rest was free. How many shares issued? We issued what? 60,000 shares. Yes, this is the number of shares. From here going to the number of shares. So from here to here, the number of shares. That's 60,000. So what will be the bonus element? You can find me the bonus element. So the bonus element will be the, that's step 4, right? So let's go down a bit. Let's go do that. So step 4. So right after this, you go ahead and go and calculate it. And so step 4, bonus element. So the bonus issue will be is equal to 60,000 shares that is issued minus the 45,714. 45,714. So basically, 60,123 less 45,714. That'll be 14,286. So that's the bonus element. So I want to write them here. But all these steps, what you're looking for is what? The bonus element and the one at full market price. Why? Because we don't wait what? Bonus, but we wait the one at full market price. So let me write it here small here. So that I'll clean this section, then we'll continue with the solution there. So that the question will still be there. Good. So the question will still be there. So the one at full market price is full market price. We calculated. We had 45,714. Then bonus. We had 14,286. So 14,286. Putting all together, we have a nice figure of 60,000 that is issued. That's all. So now I can take this section off. So can you take a snapshot whilst before I take the screen off? Sorry, before I take that section off. So now we have to weight the one at full market price. How many? What will be the weight? The weight will be nothing by from 30th of June 2018. 2019 financial statement start from 1st of what? April 2018 up to 31st of March 2019. So if you issue shares at 30th of June, how many months? So the year start from 1st April. So April, May, June, July, June is part. So making 3 months. So 3 months is gone. So if the whole year we have 12 months, 3 months, we're left with 9 months. Or you count from June 2018 up to 31st March 2019, you get 9 months. Why? Because June 30th June 2018 to that of December 2019 is 6 months, right? Plus another 3 months, you're making 9 months. So the weight will be 9 months. That's all. Now I will explain something when I started actual game. So let's go. Let's go and solve. So all this is just a workings for us to get the number of shares that came in 3 and that's what bonus. Okay. Now with that of the solution A, it said okay, it's coming together. Okay. So the A section or the A part said I will calculate earnings per share. So as usual, earnings per share. I want to calculate short for 2018 and 2019. So 2018 profit after tax was 60,000 divided by 100,000. You get what? Without or 60 pesos. We are done. 2019, we have to go and weight the average of the shares, but we can record the profit first. So we don't know the weighted average. And then the comparative. Let's go and calculate the weighted average first. Bring it. So workings. Weighted average number of shares. So don't forget about that table. Keep it brief, short, simple, smart. So let's see how best we can do that. So we start by saying date. So the date, the detail, the number of shares, the weight, and the weighted average number of shares. Good. So here is the number of shares, the weight, and the weighted average number of shares. We are done. So let's start. As we are in for 2019 financial year, which ends 30th, 31st March 2019. So as at 1st of April 2018, 1st of April 2018, that's the balance brought down. So we have something like number of shares this is 100,000. That will travel for exactly 12 months. So we have 100,000 as the weighted average number of shares. Then something happened on 30th June. So right 30th June here, let me space it out. 30th June 2018, something happened. Issue of shares. So there was a right issue. But some part was at full market price. So let's bring the full market price here. And let's bring the bonus down. Agreed. The proportion that came in at full market price, we said it was 45,714. So full market price said 45,714. And the bonus element is 14,286. 14,286. Perfect. And as usual, I know the game, right? We don't wait. As usual, we don't wait the bonus. So what you do is by wait the one at full market price. And we said it's 9 months. So 9 out of 12. So So you take 9 months of this figure and put it there. So 9 months out of this will be, so 9 divided by 12, that will give us 75 times 45714. That will give us 34,286. The nearest whole number. So 34,286. So 34,286. But for bonus, we don't wait bonus. So put and tap together 14,286. And what's the total weighted average number of shares? So total weighted average number of shares will be this answer. So that will be 100,000 plus 34,286 plus 14,286. Wow. Everything 286. 286. I like that. That's 148,570. 148,000. So 148,570. Then that's the end of the game. If you put all this together, I get 160,000 just for the weighted average 148,570. Okay, now let's go ahead and then continue the game. We are almost done. Don't forget to subscribe. I've not done that. Please don't forget to stay tuned to the diluted earnings per share. This is the basic earnings per share. The next lecture video, we are going to look at the diluted earnings per share. Good. So you put this one in 148,572. And basically we get something like, so let's divide 80,000, 1, 2, 3 divided by 142,572. No, it's 148, not 142. 148,572. Great. So you get 0.5385. So you get 53.85 pesos. Wow. So which year are they doing well? Definitely, you tell me that 2018 they are doing well, despite an increase in profits by 20,000. They are doing well in 2018, right? Anytime there's bonus, don't forget that it will stop the profits. Anytime there's bonus, it causes confusion. Why? Because bonus will not bring money by taking money away. So let's assume that that bonus will exist here. Then let's see how the shares will look like, or how the earnings per share will behave. So be comparative earnings per share. Comparative earnings per share. Instead of the comparative, pick the last year's profit after tax. So last year's profit, like that 2018 profit after tax. So let's see. 2018 profit after tax, that's 60,000 divided by that of the bonus. Add the bonus to any shares that's available. The number of shares is 100,000 plus the bonus element, which is what 14,286. So this will give us. Now you can compare. If here they are not doing well, yes, you can query them. If here this is still more than, if this is still more than this, then their earnings has dropped, or their profits has dropped down, or the performance in terms of profits has dropped down. So that is, so 60,000, 1, 2, 3 divided by 100,000, so the 114,286. That will give us good grade 52 dot what dot 52.50. Great. So I'm saying, let me write that one here. 52, which is equal to 52 dot what dot 50%. Then I think they are doing well. They are doing well because that's at least increased by more than a test one. So they are doing well. The performance has been increased. So even though if you compare this to this, performance has dropped, that's a wrong comparison. A wrong word comparison. Yes. Because if I tell you that COVID has occurred 2019, 2018 no COVID, you can't say that you've done bad. Let's consider that the COVID has occurred 2018 and let's see the result. That's all. So basically, that is the end of today's edition. Thank you very much for coming. Kindly subscribe to the page if you have not done that. My name is Target, once again from Target Professional Consult. Great. Now, in the next lecture, we're going to look at the diluted earnings per share. So stay tuned for everything you need to know about diluted earnings per share. So diluted earnings per share. That is the next chapter for us to complete the course. Great. So have a great day and share the links to your friends as well. Thank you. Goodbye, everyone.